Good afternoon. Good afternoon. Listen, I wanted to shoot this quick video to respond to some questions surrounding Andrea's results. And by the way, awesome job. Awesome job. It's just good to see that the MACD, you're using the MACD and the 50 moving average. It's killer. It will win every time. It's just a matter of, just really being present at the charts. And clearly by your results, I see that you are. And most of these trades, from what I've seen, is no more than 20 pips. So you are rocking. Keep it up. Keep it up. The thing is to get good at one thing first, and you're certainly getting good at this, so that's a great thing. But I did want to address some of the questions. One of them was a concern about getting in basically too late and how you can get in early and catch the move. And so I wanted to talk about that first. And there was some concern about dropping down to the lower time frames because of the fake outs, and that is true. The lower the time frame, the more fake outs, the more indecision that you have. But one of the ways that you can get in on the move early. Now, let me just preface this by saying you will be getting in prior to the candle crossing and closing below or above the 50. So I just want to make that clear. Now, I talk a lot about quality trades and low risk and high risk trades. If you are selling and you get into the trade before the candle cross below and close on the 50, you can still profit. Yeah, I'm not saying you won't be able to profit. You can still do that, but it's a high risk trade, right? It's a high risk trade because it's a low quality trade. But I'm not saying that you can't profit, right? Just know what you're getting into. That's all. But here's how you can also solidify that even more, right? Even with that, confirmations and everything. So what you can do to try to catch the move before it crossed the 50, you can take your vertical line, and when you get your second small arrow, go ahead and put your vertical on there and then drop down to the lower time frame. Drop down to the 15. Okay, you can drop down to the 15. And when you drop down to the 15, you still are looking for the confirmations, right? You're still looking for the triples. No matter what, you're still looking for the triples. But when you get the first small arrow and you drop down to the 15, most often you would have the triples on the lower time frame on the 15 minute. So in this case, you look left, you have the triples. We're still, in this case, you crossed over the 50, which is great. So now this is an opportunity to take the trade. Now you would have gotten a little small pullback here, but it would have met the criteria. Now let's look at the bottom, your MACD. Your MACD is making its way across the center of the MACD. What you're primarily looking for when you trade it this way is not so much the cross. If you get the cross, that's great. But what you're looking for is for the signal line, the selling line, to be on top of the MACD. That's what you're looking for because that signifies strong selling momentum, right? Stronger selling momentum. And if you have that, that's fine, even if it hasn't crossed below yet. And clearly you can see that it's making its way. And it looks like it just touched the 0-0 line on the MACD. So this would be a trade that you can certainly get in. Now, when you do this, you can base I personally would base my TP from the hour time frame. I'll just be looking at the lower time frame for entry, and that's it. But as far as my TP, I will be basing that on my hour, if that's the time frame that I'm trading on. So I'll go back, I'll enter in based on this confirmation, then I'll go back and I would base my TP on the hour, what's happening with the support and resistance on the hour time frame, right? So in this case here, you would have already entered the trade. So you would just, basically go to look left to the previous support, and this would be your area. Right here is about 15 pips. So of course, in that case, I would drop down two positions at 10 pips each so that you can get your your 20. You can get your 20. Okay. Now, what you can also do is you lock that in. Then when the candle close below the 50 on the hour, then you basically can go back to the confirmations that we talked about, right? And this will be your second entry. This would be your second entry. So it closed right here. Okay. So you would have been out with your 20 at this point. It closed right here. And then you're looking for your previous, let me close in some. You're looking for your previous support dots from this point. And you can go support or resistance. So right here, you're looking, you have your support that's right here. Okay. And then you have your next one is right there. So what I would do, because you got a little support here, so there may be some resistance going on, right? So you want to consider that. But just know you're in a stronger selling position here. So if you're looking at this area right here, that's about 31 pips. So what I recommend is stick to the 20. Stick to the 20. And if you want to solidify and get into an even higher low risk position, drop 2 positions at 10 and you're good to go, right? Drop 2 positions at 10 and you're good to go. Also remember the center line between the trend lines, that also serves as support and resistance. So you can even use that as a benchmark to determine how far you want to take it, right? So you can do that as well. So that's 17 pips. So again, 2 positions, 10 pips each. You got your 20, you're good to go. So now let's look at Euroclad. We're gonna and back test this for yourself, but this is how you can get in before the triple arrows appear. This is how you can actually get in. So what I would do, and I've done this in the past, and sometimes I still do it, to be perfectly honest. But just know the risk that you're in. Okay. There's always use always your confirmations to just solidify it more and minimize that risk. So on the second small arrow that appears, you put your vertical from the hour, drop down to the 15-minute. Drop down to the 15-minute. This is how you get in early and catch some of the move before it crossed the 50. Before it crossed the 50. So we were looking for that vertical, right? We're looking for that vertical, and that would be right here. And what you're looking for on the 15 is the triple arrows. You're looking for the triple arrows. That's your primary confirmation. And you look left, you have your triples. Get good, right? And it has crossed over the 50. So this would be your entry, right? When this candle closes, of course, this would be your entry. What you want to do is you want to look at your MACD. Okay, look at your MACD. Now the MACD, again, not necessarily crossing. If it is, great. But what you're primarily looking for is for the MACD line, because we're buying in this case, to be above your signal line. And of course, ascending through your center line on the MACD. Okay, that's what you're looking for. So you have that here. You see where the vertical. So you have that. That has definitely gone above. This is great. This is a good position, right? And then you want to look left for your TP to the previous resistance, which is right here. So that's about 12 pips right there. Okay, and then you can go a step up. All right, a little Stairmaster action. That's 24 pips. But what are we looking for? We're looking for 20 pips. Get good at 21st. Get good at 21st. You see what Andrea's done. He's gotten good at 20 pips, dropping 2 positions at 10 pips. And in some of the trades, straight 20 pips. So this is how you can do that and capitalize on the move. I will take it back to my hour because I will calculate my pips based on the hour chart. So in this case, right, you would have entered in, and this area right here is where I would have been looking to take my TP, 20 pips or 2 positions at 10. So I'm hoping that makes sense. Let's go to another pair. Let's go to RJPY. Actually, Let's do Euro JPY. Let's do Euro instead, right? Euro JPY. But again, back test this. This works as well. Okay. Just know that if you're in a high quality trade, you're in a low risk trade. If you're in a low risk trade, you're in a high quality trade. And the 50 moving average is what makes that determination. Okay. So I'm not saying that you can't profit if you get in above, but you want to have a strategy. You still want confirmations. You still want to minimize risk. And this is the way that you can do that. Okay. So what you're going to do is you're going to wait for one small arrow to appear. One small arrow to appear. Okay. And on this one here, let's say we went right here on our vertical. We're going to drop down on the 15. And we're looking for triples on the 15. Okay, we're looking for triples on the 15. Are we on the 15 yet? Not yet. A little slow. There we go. So we're on the 15. Okay, so here is your 15. So look left. We're looking for triple arrows, right? And what was this? This was bullish, okay? This is the most recent big arrow, and it was bullish. Great, that's what we're looking for. Well, I have two arrows here. I want to make sure. Let me go back, look at the date on that one. That one is on the 11th, okay? So let's go to the 11th. No, that's not right. Bear with me. That's not right. Okay. Let's remove that. Okay, this is the one right here. And that is on the 7th. Okay, so on the 7th, that's what we're looking for. We're looking for triples. Okay, a bullish move, and we're looking for triples. Okay, so let's go back here. Let's go back here. We're looking for the 7th. Okay, no, that's not. Okay, so we're looking for the 7th. There we go. Okay, so we have our vertical. Look left. Do we have our triples? Absolutely. Is price above the 50? Absolutely. Is the blue line above the red line going penetrating through the 0, 0? Yes. This is your trade. So now you can get into that trade, and then if you want to base your TP on the 15-minute, you can, but I like to base mine on the hour. I'm just looking for the lower time frame to enter. That's it. So now I would have been able to get in this trade early before the triples actually appeared on the hour chart. So this is how you can safely do that, to get in early on the move and get your pips and be done with it. And if you have a nice little Stairmaster, you can do a nice little Stairmaster as well. Always look left for that information. And that's how you do that. If somebody asks, how do you get in early on the move? That's how you get in early on the move. And you still can do that relatively safe, right? And still add a little quality in your trade. Now, the risk to reward ratio, the stop loss, in other words. Okay, how do you guys deal with the stop loss on the strategy? Okay, because I find sometimes the 50 MA is too far up or down. Right now, the stop loss is relative. I really don't speak a lot about the stop loss because it depends on your risk tolerance. It depends on your account size and the leverage that you're utilizing. The arrows is used as a rule of thumb to identify your stop loss. And I'm gonna be real honest with you. Yes, your risk is going to be higher when you use the arrows. However, when you're utilizing the 20 pip strategy and you have good confirmations of entry, you will your percentage of your win percentage is much higher. In other words, you will hit profit at a much higher rate than you would hit that stop loss, which makes it okay. But again, your risk tolerance will determine if that's what you want to do. The other option that you can use instead of the utilizing the arrows, you can utilize your support and resistance dots, your previous support and resistance dots. So you would have entered into this position here. You would have used, honestly, in this case, if you would have entered in below this 50, then definitely you want to go below your big arrow. And that's not bad. But let's say you're up in this area now, right? What you want to do is just move your stop loss to the previous resistance. So if you're buying and you're up in here, your entry is up in here, you can use the previous support dots or resistance dots, right? And then now same thing applies. So that was that day. Now this day, you're up in this area, your entry is up in this area. Then what I would do is I would use my previous support or resistance dots. So you want to consistently move your stop loss up as your entry increase. And I would recommend using the day separator so that you can clearly see from one day to the next. So if you're in this day, I will be looking at my previous support dots from the previous day if your entry is up here. Okay, so that's pretty much what you can do to tighten the stop loss and your entry, to tighten it, because obviously if you're up in this day, you don't want your stop loss to be below this arrow here, though your percentage of winning your trade is much higher than it is of you getting hit on your stop loss. But again, those are just some options that you can use, because ultimately when it comes to the stop loss, it's really based on your risk tolerance. So is there a way to catch the move earlier? I covered that. And this is causing me to take lower risk to reward. Yeah, so I covered that as well. And you don't necessarily have to take less trades. Like I said, you can, when you get the small arrow on your hour time frame, just drop down to the 15-minute and you would likely have your triples. The confirmation that you want to be looking for on the 15-minute is, do I have my triples? Is it going in the same direction that I'm trading? Is it bullish if you're going bullish, right? What is your MACD doing? For bullish, is it above the MACD, above the signal, right? Is it going through your center line? These are things you're looking for on the 15-minute to determine if you want to get in. And if those things line up, then voila, get in. So that means you would have gotten in early on the move. You would have gotten in early on the move, but you always want to have confirmations, and those will be great confirmations for you. I think I covered everything, the questions that was asked surrounding that. If I was wondering if there are any having issues, can enter in 15 minutes to catch the move early, but that's not the route. So someone said, Rich said that, you could do this on a 15-minute. That's not the route that he would take. But and he's right, because of the fake outs. But confirmations are everything. You don't just jump in. Things still have to line up. And this is the confirmations that you want to use to get the move early. And these are just suggestions. You don't have to do it. And I always recommend that you back test on your own, just so that you can build the confidence in if you decided to go that route. Lose a lot, trust it. So I don't know why you were losing on that, when you drop down, but use confirmations. If not, hey, what we talked about is solid, and you can always wait for your triples and of course for it to cross over and all of that. You can always do that, but you can catch that move earlier by dropping down and utilizing the confirmations that I just spoke of. So let me know what you think. Try that out. Let me know what you think. I'm always, waiting and hoping that things work out for you all in catching the pips. Now, patience is going to be key no matter what. Okay, we can't rush the market. We can't, force the market, and we have to exercise patience. Use your alerts.